Welcome to everybody. It is my pleasure to actually host, together with the Croatian Presidency, the EU Embassy, and the Association for the European Integration, this semi-annual meeting that we all have. I mean, it's not because of the corona that we actually don't keep our tradition, as our tradition every 6 months to host a meeting with the country that holds the presidency. I'm very happy that Croatia, with the presidency now, has actually taken upon to host us, and beautiful music and beautiful pictures. And without further ado, I will pass the microphone or the Zoom to the ambassador of Croatia into Israel, His Excellency Vesela Mrđen Korać. I hope I pronounced the word like it is. Okay, so this is please, Ambassador, the floor is yours.
Thank you very much, Dan. Shalom lekulam. Thank you all for joining us today for a traditional EU presidency joint venture, as Mr. Catarivas already said. And I would like to thank to my co-hosts, Mr. Catarivas and Ms. Michel from the Israeli EU Chamber. Also to Dr. Sion from Israeli Association for the European Studies at Hebrew University for coordinating all of us. And certainly to my colleague, Ambassador Giaufret, and the EU delegation. 2 days ago, on 30th of May, Croatia celebrated 30th anniversary of the constitution of Croatian Democratic Parliament. And the day is also National Day of Croatia, so I'm glad that we can mark it together today with this event until a proper reception would be possible. And although the monetary policy is not within the competencies of the presidency nor the commission, due to the current very specific crisis and economic stalemate that this time evolved from the decisions of most of our governments to slow down or to stop business activities. And recovery and investments depend on our monetary policies as well. This was preferred topic of the Israeli EU Chamber, so today I'm happy to have with us as the keynote speakers, chief economists of the national banks of Israel and Croatia, Mr. Strawczynski and Mr. Šošić, who are ready to share with us their views on current developments. Only 4.5 months ago, we celebrated opening of the Croatian presidency here in Tel Aviv in old-fashioned reception. And then I was introducing one of the greatest challenges that we were preparing for, illegal migration and Croatian accession to Schengen. But unfortunately, very sudden, all of us, we came to the big challenge of traveling from our homes to our office spaces, and even today not being sure if we would be able to travel this summer abroad. So the presidency soon got into the activation of integrated political crisis response to enable operational cooperation of the institutions. Suddenly, we were focusing on coordinating repatriation of our citizens, but all of the time we have been strongly advocating keeping open borders and also enabling transportation corridors, supply chains, and organizing humanitarian assistance within and also beyond the borders of the European Union. We organized and we started to organize a number of ministerial video conferences, virtual summit with temporary derogation from Council's rules of procedures. And at the beginning of this unprecedented existential crisis, the first reactions of most of us were focused on national protective measures aiming to save lives of our citizens, what many skeptics saw as an indication of possible serious partition of the Union. Soon we recognized the necessity to respond to the humanitarian dimension of the crisis, and also we became aware of the economic, social, and fiscal fallout across the member states, with the disparities widening and economies weakening on a daily basis. As during all the difficult moments of our history, this brought us back to introspect and reflect on the core values and the choice of moving alone or uniting together in strengthening our solidarities, recovering our economies, and restoring our freedoms. Last week, the Commission presented the new revised multi-annual financial framework together with the recovery instrument, the Next Generation EU, aiming to support member states with regard to the investment and reforms, including agriculture, incentivizing private investment, and addressing the issue that arise from this crisis, such as the new health program, while supporting and strengthening the EU neighborhood development and the humanitarian cooperation and assistance. The final decision is on the member states, of course, and on European Parliament as well. Working level discussions are already in process, preparing for the discussions of head of states and governments meeting in mid of June. And without diminishing the complexity of this exercise and taking into account some very serious questions already heard, Croatia is optimistic about the possibility of reaching an agreement, hopefully during the summer of this year, as we see this moment as a special milestone for the development of the European project and the future of the EU. Besides European Commission, European Investment Bank, as well as European Central Bank, have been adopting different set of measures and preparing new packages in order not only to calm the markets, but also to facilitate its recovery. So we'll hear later from Mr. Šošić his expert views on such current responses. And this is, for the moment, I will give the floor to my colleague further. Thank you very much.
Thank you. They want me to take over now. Well, thank you, Madam Ambassador, for this introduction. Well, you know, central bankers are not really used to operate in the limelight at the center of the stage. So,
but wait, my colleague Ambassador, wait, Vedran.
Sorry.
Just a moment.
Just a moment. We will ask.
Yeah, just introduction.
Giaufret, please. Ambassador Giaufret, please.
Thank you. Thank you very much. I'd like to, I don't want to take too much of the time because I'm sure that we all looking forward to hear from the experts on the topic. Just let me thank my friend and colleague Vesela and Dan Catarivas together with Maya Sion for organizing this digital seminar. I think it's important that we meet digitally today because even if because of the corona we are unable to meet in person, the reason for us to talk and exchange are greater than in the past. The coronavirus has brought a huge public health challenge to all our societies, but now we are facing also the economic consequences of the corona crisis. And knowing how integrated the Israeli economy and European economy are after so many years of economic cooperation, I think it's important that we understand the direction we're taking and where we're going and the challenges we're facing. So thank you for organizing this today. Europe and the world economies are currently experiencing an extraordinary and severe shock. Public health measures combined to the spread of the coronavirus have halted many economic activities across the globe. And in the first quarter of this year, according to preliminary estimates, the euro area's economy has declined by 3.8% on quarter. And this marks, let's remember it, the first reversal in growth in 7 years. A deep recession is waiting for us, amounting to a contractional in real GDP of 5% this year. But there's also a worse scenario. In a severe scenario, the real GDP would fall by 12% in 2020. At the same time, these scenarios foresee some initial rebound in economic activity in the second half of this year, as the containment measures are gradually lifted, even if the speed and the scale of the recovery over the medium term are highly uncertain. And I think this is a reality we have to cope with. There's highly uncertainty about the final outcome of this shock. The monetary policy, the EU monetary policy, is playing a vital role in addressing this challenge. The monetary policy cannot anticipate the point at which the economy will reopen, but it can make sure that the necessary monetary and financial conditions for the restoration of economic activity are in place, in line with the easing of the containment measures that are foreseen. In particular, our measures are helping to preserve the flow of credit to households and firms. The range of measures we have taken, the European Central Bank has taken since March, reinforce each other and work as a package together with measures taken by the EIB, the Commission and Member States to ensure that the transmission of our monetary policy to bank lending rates to all segments of market-based financing and ultimately to households and firms in all sectors and countries. As the Croatian ambassador was saying just a few seconds ago, the European Commission has put forward at the beginning of the month a proposal for a recovery, a major recovery plan upon mandate by the European Council. To ensure the recovery, that the recovery is sustainable, even inclusive and fair for all member states, the European Commission has proposed to create a new recovery instrument, which is called Next Generation European Union. And this is really an indication that this is an instrument for the future. Next Generation EU of 750 billion euros, as well as target reinforcement to the long-term EU budget for the year 2021-2027, which would bring the total financial firepower of the EU budget to 1.85 trillion euros. So it's a very important and massive response, which is now in the hands of the member states. So of course we count on the presidency, the Croatian presidency and the German presidency will follow to take this through the council for a rapid agreement, despite certainly the very difficult issues that will be there. It is an important moment for Europe. I think we have read many articles and reflections on what this package means, but certainly it is a qualitative step that Europe is taking. And also, I think what is important is that we don't forget about our priorities before the crisis. I think the priority before the crisis in the environmental area, in the digital area, remain the priority of the EU. We need to stand the course, and we need to try to use this incredible health crisis and socioeconomic crisis as an opportunity to reinforce our determination to promote a change in the climate areas and in digital area. It's an immense challenge we're facing, but also a great opportunity. So we intend to continue working on the European Green Deal and digitalization to boost jobs and growth, to foster the resilience of our economies and our societies, and of course the healthy environment. And I believe that in these areas, certainly the cooperation that we already have with Israel can also increase. So this new priority in this new context, with this challenge we're facing, certainly open area of work between the European Union and Israel. And I look forward to continuing the discussions with the Israeli EU Chamber of Commerce in the future. And now I look forward to hear from the experts on the monetary policy. Thank you very much.
Well, thank you, Ambassador. And maybe Ambassador from Croatia, can you introduce our speaker from Croatia, please?
Yes, of course, certainly. Mr. Vedran Šošić, he spent, in fact, most of his career with the Croatian National Bank before this position of Chief Economist of National Bank of Croatia. He was Vice Governor of our National Bank, But here I would like to emphasize that Vedran also was our colleague diplomat in Croatian EU mission in Brussels, serving, so that he is somehow part of our diplomatic circle as well. The Croatian National Bank has had the key role also in the process of Croatia's process of introducing the euro as our official currency, which was part of the Croatian accession treaty as well. So we started the procedure 1 year ago, and Mr. Šošić will tell us what is the state of play of this process, together with the overview of the challenges and responses in the areas of small and big European currencies. So Mr. Šošić, Vedran, please, the floor is yours. The mic is yours.
Thank you, Madam Ambassador. I'm sorry for jumping in ahead. As you mentioned, this is a bit awkward for us as well, as central bankers are not usually used to be in the limelight in the center of the scene. They are usually used to operate somewhere in the back and not always in full visibility. So this newly acquired role, as we heard, the newly acquired interests puts a great pressure on us to explain our policies, what we do, and to communicate with the general public, which is also slightly different compared to what we used to do when we communicated mostly with the financial experts, with financial markets participants. So this is also for us something that we need to learn. I have put up a short presentation. This is also a bit awkward because as a non-euro area member state, Croatia still has its own currency, kuna, and we are likely to keep it for at least a few more years, although we are on our way to the euro area, as Madam Ambassador mentioned. So I will try to do a bit of a comparison between what the ECB was doing, what we have been doing for the past couple of months in response to the COVID crisis, and in the end to mention a little bit, to talk a little bit about our plans to join euro area and what it means to us. So I will start sharing my screen. So I hope you can see it now. Okay, so this is the presentation. So as we have heard, European countries enacted quite thoroughly already in March, but it lasted throughout April and most of May, quite strict lockdown regimes. And Croatia, I have not indicated each and single one of these countries, but Croatia is a red dot, and you can see that we had one of the strictest lockdown regimes in Europe. And this has helped reduce the incidence of the number of cases. It kept it down. So now we have a bit more than 2,000 cases. So if you divide it by population, you get to about maybe 500 cases per inhabitant, which is quite low in European for European countries. And what is also important to see here is that already in May, the intensity, the stringency of the lockdown regimes was declining. So countries started to ease their lockdown regimes also because of the improved epidemiological situation, but also in order to reduce the amount of damage inflicted by the lockdown regimes on the economy. And what is the extent of the damage? So this changes to the forecasts. This is a consensus forecast GDP growth for for selected European countries. On the left-hand side, you have old member states. On the right-hand side, you have new member states, and you can see the the magnitude of difference only 3 months make. So these are differences of what financial institutions, professional forecasters expected in January. Those are blue bars, and you can see that in January, the growth was expected financial markets expected very strong growth in Central and Eastern Europe. And you can see the red bars, what the financial market expected in April. So this is a change in expectations of during only 3 months when the epidemics came to Europe and these lockdown regimes were enacted. But just to make it clear, this is not entirely due to lockdown regimes. Even if countries didn't enact such a strict lockdown regimes, people would still stay at home, they would reduce their spending, firms would cut their investments, postpone investment. So it's not entirely due to lockdown. The fact that we had epidemics is more than enough to explain most of this damage to the economy. The expectations slightly deteriorated since April, but the difference is not so large. And also it seems that now we, as lockdown regimes are easing, that the expectations are no longer deteriorating. So compared to this drastic change in economic outlook, we had a strong reaction, indeed unprecedented reaction from the central banks. Here, this is one indicator of monetary policy that we usually look at. So this is size of the balance sheet. This indicates how much liquidity central banks inject into the financial market in order to maintain favorable financing conditions. So what you see since the beginning of the year, when the outlook changed, the ECB, this is the red line, injected almost 10% of liquidity in the financial markets. This is unprecedented in speed and scale, even to the financial, even to the period when global financial crisis broke out, and even to the sovereign debt crisis, because the reaction was spread over a much longer period of more than a year. So now we had a very big reaction in only a matter of few months. Federal Reserve, US Central Bank, had even a larger reaction, but this is somewhat due to differences in the initial conditions, because Fed was tightening before before this crisis came, and also this is also in part due to differences in the structure of financial markets. The Fed purchased wider variety of different papers because the banks play a much smaller role in the US financial system. And also we know that ECB is now at the cruising speed, that the pace of increase will continue at least until the year, and the ECB indicated the willingness to, in case it is needed, to further boost the expansive stance of the monetary policy. So what is the reason for this, change in the monetary policy stance? Central banks cannot induce customers to go out and spend if they are afraid of the virus, if they are afraid about their future incomes. Neither they can induce companies to invest, but what central banks can do, they can maintain favorable financing conditions, so companies can borrow, and when the recovery starts, that easy monetary conditions can facilitate recovery. It can speed up recovery, and this is important because according to the most recent surveys, so European Central Bank regularly asks banks, how do you assess demand for loans? And there was a very sharp, already in March, this has continued in April, very sharp increase in demand for loans from the companies. So companies are having liquidity problems because their sales slumped and they still need to pay their rents, their wages, and they need emergency liquidity from the banks. So for that reason, they are applying to banks. And you see on the right-hand side, you see the reported increase in the demand, and here is the actual pace of lending. With customers, with households, it's the opposite. So regardless of the easy financing conditions, household demand for loans went down. Apparently, in the face of the lockdown and uncertainty, households started to contract their spending, they increased their savings, and they no longer demand loans. What is interesting is that we can see the very same pattern in Croatia. So you can see both the demand for loans going up, so banks are reporting customers queuing up and asking for loans, corporates, and we see a very sharp increase in the pace of lending to the non-financial corporations. But simply, putting liquidity in the banks does not, and there is a lot of liquidity in the banks, both in the euro area and in Croatia. Now it is increasing. It does, so banks have capacity, but it does not mean that banks will automatically lend, because banks have reported recently some tightening of the lending standards. So despite all this monetary loosening, banks are becoming more cautious because we don't know. Uncertainty is very high. We don't know when these liquidity issues faced by the corporates will evolve into solvency issues, and then maybe some of the companies will not survive the crisis. So for that reason, banks have been very cautious. They have been tightening their standards. They are scrutinizing more heavily companies when they are lending. Also, one interesting finding from the survey is that banks perceive monetary policy in a very positive way. They adjust in response to a very accommodative monetary policy. They expect to adjust their lending conditions to make them to make lending somewhat more accessible to the companies. And also one other measure that was initiated by it's not all the game is not only with the central banks, but governments have also been helping. Some countries initiated large guarantee schemes. So in order to alleviate these concerns about the solvency of the corporate sectors, governments are guaranteeing for portions of the loans, and Germany has particularly large programs in place, but a number of other countries as well. And also, what is important, we have EIB guarantees, European guarantee scheme. So this scheme is worth 25 billion euros, and the aim is to mobilize up to 200 billion in loans. So this is also contributing to lending, one area where EU is also playing a role. So coming from Central and Eastern Europe, as you have seen, the shock has been symmetric. It affected both Western and Eastern European countries, new member states, old member states, in a very similar way. But the developments, the economic developments are not exactly the same. So what Central and Eastern European countries had to grapple with is increase in risk premiums. So this is the spread between Croatian, Bulgarian, Polish, Czech, and Slovenia's yield. So what they pay to borrow to investors, and the German. So what they pay in excess to Germany, or what Germany pays to investors. And you can see that in late February, early March, there was a very rapid sharp increase in risk premium. So investors were asking these countries to pay more when they borrow. At the same time, when they enacted large fiscal packages and they needed to borrow a large amount of money. And also what happened, strong depreciation pressures on currencies of these countries, so which also because of borrowing in foreign currency, it can, because companies borrow in foreign currency, it can also make it harder for companies to survive the crisis. So in order to cope with these twin pressures, we had in Croatia to act in somewhat different manner compared to European Central Bank. So we had to intervene in our foreign currency market to the tune, so the interventions in March were to the tune of 2.6 billion euros. We sold from our international reserves euros worth 5.5% of GDP. This, for that reason, you can see that this is Croatian kuna, is this red line here. It didn't move as much as currencies of some other Central Eastern European countries, like, for example, Hungary, Poland, Romania, or Czech Republic, where currencies depreciated up to 9% in March. Also, this large intervention stabilized the exchange rate already in mid-March. And also what we did was we arranged for a swap line with the European Central Bank in order to tame depreciation expectations. So in Croatia, unlike in many emerging market countries, depreciation pressures have not been driven by outflows of capital, so foreign investors taking funds out of the country. This was mostly driven by domestic households and companies switching portfolios from kuna, from domestic currency, to euros, to foreign currency. This is called euroization. I know that Israel had a large dollarization a few decades ago, but they managed to get rid of this problem. So for that reason, we always try to maintain exchange rate stability. And also what we see as very helpful is the perspective of the ERM2 entry. So Croatia expressed a year ago intention to enter the ERM2. We have provided a list of reforms in 6 different areas. Also, we have applied to enter into close cooperation with the single supervisory mechanism of the European Central Bank. And we expect now in the coming weeks to notify the European institutions and Euro area member states that we have managed to accomplish all these reforms. And also the ECB is expected to publish results of the comprehensive assessment later this week. So in June, we hope that it will be confirmed that we have fulfilled all the necessary reforms that we have indicated we'll do before entering the ERM2. And then it's up to the member states to accept Croatia. So this perspective of joining the ERM2 is also making our job a little bit easier, also strengthening the psychological, the exchange rate income. One problem with intervening in the foreign exchange market was that we have reduced kuna liquidity. So when we sell foreign currency, we reduce the amount of liquidity in the bank. So we needed to use other channels to create liquidity. So what we did, we started government bond purchases for the first time. So unlike ECB, which has been purchasing bonds for more than government bonds for more than a decade, very few Central and Eastern European countries did. Actually, they didn't do it until a few months ago. And now both Polish Central Bank, Hungarian Central Bank, Romanian Central Bank, Croatian Central Bank have been purchasing government bonds in order to create liquidity and to maintain favorable financing conditions. Czech Republic enacted legislative changes so they can purchase government bonds in case of a need. And we have purchased government bonds in the amount of 4.4% of GDP. We have also reduced our reserve requirements, on mandatory reserve requirement on banks from 9 from 12 to 9%. This increased liquidity for about 1.7% of GDP. And we have also provided liquidity to banks with short-term and long-term liquidity operations at very favorable interest rates. That way, we have more than compensated for the reduction in the liquidity that was induced by our foreign currency interventions. So we have managed to maintain favorable financing conditions, and we see pickup in lending to the corporate sector, similar to euro area. So this is one additional favorable characteristic of our banking system, that it is highly capitalized. The capital adequacy rate is more than 23%. The minimum is at 10%, so it's more than double the minimum. They have a lot of now, as you saw, lot of kuna liquidity. They have very high liquidity coverage ratio. 100 is the minimum. Our banks have more than 170%. And also, what is different compared to the global financial crisis is that the banks have deleveraged. So before the global financial crisis, our banks borrowed a lot abroad. Now they rely on domestic deposits, so they no longer are dependent on foreign funding. So for all these reasons, we believe that we will be able to maintain favorable financing conditions in Croatia, and that banks will continue providing lending to the corporate sector. Thank you. So if there are any questions, I don't know if I'm supposed to take questions now or wait until the end of the second presentation.
Thank you very much. I think that we will keep the question for the end. And actually now I would very much like to turn to Professor Michel Strawczynski. He is the director of the research department of the Bank of Israel. And under his capacity is involved in the material preparation for the monetary policy decision process and support the governor in economic advising to the government. After holding an economic position at the Ministry of Energy and Infrastructure, he started his service at the Bank of Israel in 1993. He served for 8 years as an economist and senior economist at different areas at the research department. And afterward, he served 11 years as deputy and acting director of the department. During this period, Michel Strawczynski led the economic team as part of Israel's admission to the OECD and the inter-ministry research group on the Earned Income Tax Credit program in Israel. Professor Strawczynski holds a PhD in economics from the Hebrew University of Jerusalem and performed postdoctoral studies at the Massachusetts Institute of Technology. He taught at the Ben Gurion and Tel Aviv University and at the IDC in Herzliya. He is currently adjunct professor of economics at the Hebrew University of Jerusalem. He performed research at the area of public economics and fiscal policy and published articles at leading journal in economics. He is also the co-editor of the Israel Economic Review. Please, Michel, the floor is yours.
Thanks a lot, Danny. Thanks for inviting me. The monetary part of the Israeli story is relatively similar, like in many other countries, and also we are expecting the firms to use the loans in order to survive this crisis. What is different about us is that we are also the economic advisor of the government. So let me see if I can share. Okay, I will try to explain the situation barely. So the difference between our case and the usual case is that we act as economic advisor of the government. And that means that our recommendation is quite important in order to back the general economic policy. So the story about Israel during the COVID crisis is that we actually closed the economy very early compared to other countries. And that implied a closure of about 37% of the economy, which means a relatively important reduction in activity. And the main question was, what should be the reaction? So usually central banks, what they do is they mention that you should be careful about the deficit, or the government deficit. In fact, we were the ones that were mentioned before the crisis that Israel has a relatively high cyclically adjusted deficit, which means kind of structural deficit, which was around 4% before the crisis. But given the very particular event that we are living and the exceptional circumstances, from the very beginning, we were telling the government that at this time, it is possible to increase the deficit. We have to remember that the increase in the deficit is related, first of all, because of the reduction in income revenues, in tax revenues. Okay, so that kind of automatic stabilizer when the deficit goes up. And then, of course, you need to design many plans in order to help the economy. So we were, at the very beginning, we were saying that the right time to take care about the deficit is immediately after the crisis. In terms of the timeline, it means approximately in 2021, okay? Because if you look at 2020, we are having now the automatic stabilizers. We're going to see the economy recovering in the second half of the year. Actually, what we need now is an employment plan, which is the one that has been accepted. And that means that you continue to spend money. In fact, there are different estimates, but the minimal one is around 3 billion for the employment plan. And the employment plan is crucial because now firms are getting out from the closure, they're getting back to business. And what we have done in Israel is that at the very beginning, the government took care of vacational payment for most workers because of the health reasons. So we have to take care of that payment, and that was very important for firms in order to survive. But at the same time, now the question is whether they will come back. And some of the firms are waiting to see what are the plans done by the government. The plan that is being adopted these days is an employment plan. We are subsidizing the return to activity by firms. We are giving a subsidy which is related to each person that comes back to activity. And that means that all this story will bring us to a deficit, according to our estimate, of 11% of GDP in 2020. This is a relatively high deficit, and the main reason is that we are starting from a relatively high deficit at the very beginning. But at the same time, we started this crisis with a relatively low level of debt, which was 60% after some decades of reduction of debt year after year. And that means that at the beginning, we're in a relatively good position, and the increase of the debt to the order of 75% of GDP, although it's, of course, not comfortable, but given the magnitude of this crisis, we believe that the international markets understand this increase in debt, and the main thing is that it will be temporary. So next year, we will have to take care about the debt. Let me mention, given that I am coming from the central bank, you may expect from me to tell you what has the Bank of Israel done. And in fact, the fact that we are the economic advisor of the government helps us to see the macroeconomic policy in a complementary way. So from one side, we were advising to increase the deficit, but from the other side, we were also ready to back the government, because given that once you increase the deficit, you will have to emission of bonds. You have the Minister of Finance will emit bonds, government bonds. So we have also mentioned the plan, and we are actually doing it. We are in the middle of this plan. We are buying also government bonds. The Bank of Israel has declared that we'll buy bonds at the value of 50 billion, which is 3 times higher than in the previous crisis. So the fact that the central bank is backing also this development is a kind of, from one side we are giving an economic advice, from the other side we're also backing the Ministry of Finance to cope with the implementation of this policy. So this was one of the measures taken by the Bank of Israel. The other important measure is related to small firms. we all know that the main problems, it happens in all the countries. And we have, the central bank has done some statistics, and this crisis hit mainly firms and independent workers, and afterwards, of course, the workers. The workers were actually insured by the government. The firms, it's a much more difficult issue, because the way the government is helping them is, for example, by deferring taxes, and also by reducing the payment of municipal taxes. This is another measure that has been taken in Israel. But these things are taking a long time, and the firms are relatively frustrated because of that. And the question is whether the government is really helping and giving the right help. And the main problem with this crisis is that we all know that the government has to help, but the question is how far? How far must the government help? And I don't think that no one knows the answer to that question. And as Vedran mentioned, the main way that the governments are helping is by providing loans. And this is what we have done in Israel. We provide loans. As if we look at the small firms loans, we have provided a fund of 14 billion. And what the Bank of Israel has done to complement these loans by giving loans to the banks with a relatively low interest rate. By the way, we have also reduced interest rate from 0.25 to 0.1. So at the low rate of 0.1, we're giving loans to the banks with the condition that the banks give those loans, give cheap loans to small firms. That was another plan implemented by the Bank of Israel, which we believe is helping the firms to cope with the current situation. So all in all, if we look at the whole situation, what we see is that the fiscal help, so because we have here to differentiate between the liquidity help, which includes tax deferrals, includes loans, and all these kind of things, to the help related to the budget, which means, for example, the reduction of municipal taxes and some other, and the indemnizations given by the tax authority to the firms. If we look at all this help together, the fiscal one, Israel, according to the planned numbers, is in the number of 3.3 of GDP, which is somewhere in the middle when we compare to the international perspective. And of course, there is always the question on whether we should do more. And I think that this time we have to be clear and say that it is very difficult to answer that question. You cannot be the one that you're not helping. You should help, and this is what the government in Israel is trying to do. And the question whether this help should increase is changing over the different phases. In the current phase, the help must be through the employment plan, because now the employers are coming back, the employees are stopping to get the vacational payment, and if they are not hired again by the firms, that will become a problematic issue. And let me mention that according to our forecast, we are supposed to be on an employment of 8.5% by the end of 2020. And according to our forecast, we are expecting at the end of 2021, we will not come back yet to the level of unemployment that we have before the crisis. One final word about understanding the case of Israel. First of all, we have a young population, and that helped to have less, in the health story, to have less damage. This is one important thing to understand. And the second important thing to understand is that our production is related to high-tech. And high-tech has been less hurt by this crisis. First of all, because high-tech can work using Zoom and using all other tools from distance, while in other countries, the high-tech is not necessarily such an important part of the economy, like in the case of Israel. I think I mentioned all the most important things, and maybe I'll stop here to give you place for questions. So I'll stop here.
Well, thank you very much. Actually, now we open the floor. I mean, we still have some time. We can open the floor for question. The best thing in order to try to manage that is that you have under the chat over there, you can write your question. But if someone is really very much urging to speak, so he can raise his hand. Eventually, I can see him, and we can open him the microphone. But for the time being, I don't see any question. But anyone that wants to add something or make another comment, yes, I see. You can write your question, but I see that you don't have too many questions. Well, I think it's fine. I mean, we actually got, I think, a very nice overview both from the Croatian side and from the Israeli side. So maybe I will just ask Dr. Maya Tzion to say a few words, and maybe you can also say that as our host, because we used your Zoom from the Hebrew University. Maybe you can say a few remarks, and then. Oh, but I see there is already a question. Here there is a question from Agnes Beres to Mr. Šošić, and the question is, when do you think the Croatian economy would recover? So please.
Thank you. Well, the expected current forecast for Croatian economy, official adopted by the Ministry of Finance, is contraction of the economy of 9.4%. So this is quite a steep decline. We do not have yet the numbers for the second quarter, which will arguably be the worst. So it's still very uncertain. And the expectations of the growth for the next year, 2021, is the growth of somewhat more than 6%. So not before 2022. So even we don't expect the economy to recover the next year, only in 2 years, in about 2 years from now, so 2022, in some moderate scenario. There are more optimistic scenarios and there are more pessimistic scenarios because the uncertainty is very big. What is important for the Croatian economy is the tourist sector. As you saw, some of you may have seen some of the videos before the lectures. Croatia is a very famous tourist destination. We have almost 20% of GDP in revenues from foreign tourists. So it's a huge inflow. So it's a huge exports of services go for tourism. And we expect this to decline by 70%. So we expect to lose about 14% of GDP in tourist revenues in 2020. So a lot will depend on how fast the tourism sector recovers. So this depends on the travel, or normalization in travel industry, reduction in social distancing measure. What is fortunate, very fortunate for us, is that many people, most tourists come from the neighboring countries. So from Italy, Austria, Germany. So they can drive, so they come back by car. So we are not dependent on the air transport. So this is very fortunate, but obviously there is still a lot of uncertainty, and we also expect the recovery to be very slow and to come only over a couple of years. Thank you.
Thank you. Well, we have two more questions. One is on and it's probably the one is for Professor Strawczynski, is how will the shekel evolve regarding the euro? And then another question is there a dialogue with Israel and on different approaches with other central banks, including the ECB? Okay, and the other question is to Mr. Šošić. What do you think about the recovery of the EU economy and the USA? Are there going to be a V or a U recovery, and what will be the consequences to the other economies worldwide in each case? So maybe we give Michel to answer us about the shekel and the cooperation with different approaches with other central banks, and then for our Croatian guest about the the V shape, the U shape, and the recovery of the US? Please, Michel.
Okay. Okay, so usually it's very difficult to forecast the exchanges in the short run. In the middle run, usually the shekel was relatively strong before the crisis. And I guess that given the story of a relatively rapid increase, for example, we see the Nasdaq and we see that the recovery there is a little bit quicker. It may be a situation where the shekel will maybe become strong later, but during the crisis, actually we have a devaluation. The shekel had a high increase, and the Bank of Israel had to intervene. It was only for 1 or 2 days to provide liquidity and to stabilize the shekel. In the last time, the shekel is relatively stable. So in the short run, I do not expect sharp changes. It'll run, as I mentioned before.
Okay, and do you have a dialogue with other central banks in Europe, including the ECB?
Well, we during the crisis many conversations at the governmental level in order to share the experience. So that was the main dialogue. To sharing the experience, that's a completely new situation for all of us, and we were sharing different measures that could be taken. That was the dialogue. Not in terms of doing common measures or are important parts and so on. But in terms of the central banks, it was mainly to share experience.
We have some problem in hearing you. Okay, go ahead.
I mean, that's it. That was. I hope you have heard what I said about sharing experiences.
Right.
That's the main part.
Okay, and so for Professor Šošić, what do you think will be that about the recovery of the EU and the US? And are we going to have a V, a U, maybe a L, who knows, type of shape? And how and what will be the consequences for other economies worldwide? Please.
Well, I would say that the consensus now is a U-shaped recovery. Very few people are optimists that expect a V-shaped recovery. The recovery is likely to be slow and painful. I would say that there are more people who expect L-shaped recovery than V-shaped recovery. But this depends more on things that economists typically do not forecast, like the development of the vaccine or a cure for effective treatment for the virus. So this is if there is a vaccine or effective treatment for the virus, then it can speed up the recovery. If we get something like this by the end of this year or early next year, so it could dampen the potential second wave of the pandemic, which would hurt the economy. We could have a W-shaped recovery if there is a second wave of the pandemics and the need to make lockdown more stringent. And just to reflect on the previous question, I had the privilege to meet and discuss with issues with the two former Israeli governors, with legendary Stan Fisher. Recently, he was explaining his experience with the reserve management practices at the Bank of Israel, and also with recently with Karnit Fluk. She was in Croatia attending our regional governors meeting, and she gave an excellent presentation on fintech, because Bank of Israel is very advanced in fintech, so we were eager to learn about fintech. So I would say that we have a very good communication and cooperation, even with the officials of the central bank, even when they are no longer in a position. We have very good communication and cooperation with them.
Well, thank you very much. We are reaching the end of our seminar, of a semi-annual meeting. Maybe, as I said, Maya, you can say a few words, and then we'll give the Croatian ambassador the last word. Please, Maya.
Absolutely. Thank you, Dan, and thank you very much for this event. It's been good to hear about the EU economy and Israeli economy as well. We hope to hear some better news. I would just like to share with you the next few events by the Israeli Association for the Study of European Integration. So on the 4th of June this week, on Thursday, we have a Zoom meeting with regarding to the recent Karlsruhe ruling with the EU's future supremacy of its law versus the European Central Bank independence. Those two issues are at stake, and as you can see, we have as a speaker the Vice President of the European Parliament, Dr. Katarina Barley, and we also have Professor Eric Jones and Professor Ari Reich who would speak about that. If you would like to get an invitation, Danny, I suggest that you can send the invitation, or you can contact me. Also the email of the Israeli Association that you can find online. And the other events that we would hold is by the end of the month, we would have an event about European responses to Israeli annexation in the West Bank. And we would have several European speakers and Israeli speakers on this topic. It seems to be that on the 13th of July, the date is not final yet. We would have also two sessions with Dr. Vedran from the INSS. All of those events are also together with the Friedrich Ebert Stiftung here in Israel. And the topic, the general topic, we don't have a title yet, but it would be the new European Commission, the new European Parliament of the elections last year, and the new government in Israel that is in place finally, and followed by US elections. So how does that changes the opportunities, challenges that Israel is facing? And could be that already within 2 weeks, we would also have a Zoom session about the borders in the European Union, having a global look at the borders around the world, and especially in the European Union and also in Israel, by a group of academics who are specializing in researching this area of borders. So I very much welcome you to join us, and that can be done by the email of the Israeli Association, and then we can distribute that.
Well, as you can see, we have a lot of European subjects coming, and so before I give the last word to the ambassador, I just want to thank everybody that participated. I see that we have representatives from the Export Institute, we have from the Israeli government, from the Ministry of Economy, from our binational chambers, other ambassadors of Europe into Israel. So I hope that you enjoy the meeting that we had today. And please, Ambassador, you have the last word, please.
Thank you very much, Dan. Thank you for first for the speakers, and I'm very happy to hear that we have already very good communication and cooperation between our central banks. Also, just a small note on tourism, as we started it at Croatia is opening for our neighbors, as Mr. Šošić mentioned, but also we are in preparations for welcoming Israeli citizens to Croatia, and vice versa, Croatian tourists and visitors to Israel, hopefully soon. At the end, I would like to thank to all of the participants, to everyone, to the support. And I would just like to say that many presidencies before us had to face bigger challenges, unexpected, but we sincerely hope that none of the presidencies in the future would have to face such an unprecedented crisis as ours did, on top of which we had also unfortunate earthquake that struck our capital of Zagreb. But here we are, ready to exit stronger and together. And in that context, I would also like, and I see here my German colleague, the German ambassador, and I would like to use that opportunity to inform all of you that two of us are preparing our joint event for handing over and taking over the presidency. And I sincerely hope to see all of you, most of you, very soon, at least then, and then later on in some proper reception. Thank you all.
And as we close, for those who were late, you can see now the beautiful film again on Croatia, very nice. So you can stay for another 3 minutes. We are going to screen again a very nice film showing you beautiful pictures of Croatia. And with that, we finish, and thank you very much for your participation.